Hello guys, this is the Vertical Spread Trading Journal for Wednesday the 2nd of February. My name is David and I'm also known as the Spread Doctor. The markets were pretty much flat today. The Dow was up 0.1%. The Nasdaq was up 0.02%. The S&P was up 0.1% and the Russell was up 0.3%. The VIX, on the other hand, was down significantly. The VIX was down about 10% to close at 2291. So the VIX is still holding the line above 20, but this massive drop from Friday, I think Friday was around 34. This massive drop is, I don't know if it's signaling a relatively calmer environment relative to Friday. But as we all know, that can change anytime soon. It can change in a split second. There are now 16 days until the February contract expires, and there are now 44 days for the March contract to expire. And that means that my window of opportunity for selling spreads is now open for the March contract. And I have started looking for spreads to sell. I am yet to find anything. As soon as I find any good trade ideas, I will send out an alert. But we still have 2 weeks to go, and there's ample time for me to find trade ideas for the March contract. The earnings season is now in full swing. Amazon announced their earnings after the bell yesterday, and it was a blowout Q4. They beat the street's expectations on both the top and the bottom line. And in addition to their earnings announcement, Amazon slipped in a side note about Bezos stepping down as CEO later this year. Google announced their numbers after the bell today. I believe it was a blowout quarter. I can see Google is up about 7.2%. So yep, Google also had a blowout quarter. As I mentioned previously, earnings season usually reduces the number of potential underliers for me to sell spreads on, but I'm hopeful that I should be able to get at least 3 trade ideas for the March contract. And talking about trade ideas, I had no new trade idea today, but one of my February positions closed out today and I have booked my profits, and that trade is in PLUG, this one here. So the PLUG trade was a 55.50 put spread. Sold it for credit of 192, bought it back for 60 cents. I will drop a link to the close trade video below. Moving on to my other open positions, or to my open positions. My first open position is in TAN, and in TAN I sold the 105 100 put spread for a credit of $1.42. Let me see where TAN closed today. So TAN closed at 116.56. My short 105 put is out of the money, and no action is required on this position at the moment. The next open position is in ZYME. I sold a 45.40 put spread for a credit of $1.80. Let's see where ZYME closed. ZYME closed at 37.38. My short 45 put is still in the money. It's been in the money since last week. And although I would like to adjust this position, the bid-ask spread on the call options remains very wide, and the premium and offer is just not worth the risk. So this position might have to go down to the wire if I'm unable to adjust it. But we still have 16 days until it expires, and a lot can happen in 16 days. and the price action has been encouraging. The price action of, apart from today, today's price action has not been encouraging because it went quite high. I think it went as high as 39 something, and it was sold. It was slapped down into the close to close at 37. But the previous couple of days have been good, and I think it was upgraded on Friday. But that's the story on ZYME. My short strike is in the money. I'd like to adjust it, but I can't. The bid ask and the calls are too wide. The next one is in FOLD. FOLD, I sold the 1914 put spread for credit of $1.88. Let's see where FOLD closed. So FOLD closed at 20. My short 19 put is currently out of the money. No action is required on this one, and I quite like the price action in FOLD. Even today's price action, even with it being down 13 cents, the price action in this was quite good. And hopefully this position will close soon, all things being equal. And the final position is a synthetic position in QCLN. I don't actually have a position in this, but someone does, so we're going to cover it. On QCLN, it was selling the 77.72 put spread for a credit of $1.55. Let's see where QCLN closed. QCLN closed at $84.11. The 77 put is out of the money, no action required, and the price action on this one looks quite good, and hopefully this position should close out soon. And that takes me on to my watch list. So on my watch list today, I have ARKK, LIT, ARKG, QCLN, PBW, SI, VIR, and BEKE, and I'll quickly run through them. So ARKK closed at $146. Implied volatility is 51.3. LIT $69. Implied volatility 47.1. That should not be on my list. ARKG $107.22. Implied volatility 56. QCLN $84.11. Implied volatility 65. PBW $129. Implied volatility, that must have just ticked down, 49.5. SI, the silver ETF, $109. Implied volatility 50.4. VIR $65.79. Implied volatility 92. And finally BEKE $63.06. Implied volatility 56.4. And that brings me to the end of my journal today. I hope you enjoyed listening to it. If you have any questions or comments, just drop them underneath or below in the comment section, and have a good evening. Thank you. Goodbye.